Let's go look at the market today for March 6, 2025. It was a decidedly red day overall, and you had some big down moves of some of the major tech names on the back of Broadcom's earnings down over 6.3% there. NVIDIA down nearly 6%, Meta down 4.5%, Netflix down 8.5% on the day, Amazon down nearly 4% as well, Tesla down 5.6%. Only Apple and Google really hung in there. Even Microsoft was down over 1%. You had strength in consumer staples. You had strength in the energy sector. You had the healthcare insurance companies. Those do fairly well. Communication services, AT&T, Verizon continue to do well. And just healthcare in general continues to be strong. So the non-cyclical players are the ones that are seeing green and money flows into them, as opposed to those high flyers, those sexy names. The Mag 7 continues to see weakness. And we're at this crucial juncture with the NASDAQ to see, okay, if we get another 3-4% drop from here, that is confirming that this is a much broader pullback, kind of like what you saw in 2022, where the NASDAQ was down 33%, peak to trough. And but history says if you can hold in this area around the 200-day moving average, this is just a refresh. We know sentiment is starting to get pretty negative, and that could just be refreshing the markets for an attack to new highs. But with the tariffs still kind of there, still kind of in the back of the minds of investors and economists, that is going to be that's going to be a challenge to bring optimism back to this market. But we know that Trump he's unpredictable. 1 week he can be your enemy and the next week can be your friend. That means geopolitically, that can also mean economically as well. And so there's a lot of uncertainty in the air. These tariffs, there's been some rollback of them. It looks like another 1 month reprieve of anything that was under the USMCA, which I would imagine is our most products. So, that could give some reprieve in the short term for markets. But ultimately, there's still a lot of uncertainty weighing over the economy. You see that with consumers kind of pulling back a bit, not understanding exactly where the economy is going with all of these changes. Now, some other movements in markets, you did have treasuries roughly flat. Gold was also roughly flat. Same with crude oil. Bitcoin was down nearly 2% though. And you had some strength out of places like the home builders. You see interest rates down, and so that's likely to help home builders a bit. So that was the market today, kind of at a crucial juncture, especially for the NASDAQ, which we know weighs heavily on the broader market. And so we'll be watching in the coming weeks to see if we get a follow through to the downside and a decisive break of the 200-day moving average. If we do, then certainly we could be in for a much broader risk-off environment. But if we recapture that over the next couple of weeks, and capture that 200-day moving average, then I think this refresh is healthy for markets.